Mike, welcome to Wealth Talk today.
Thank you. Great to be here.
Yeah, very good. So, Mike, for those listeners who perhaps have not heard of CrowdProperty and don't know your story, would you mind just giving us a bit of background, please?
Sure, certainly. Well, we set up CrowdProperty actually in 2013, and we've been lending since 2014. What we set out to do as a business is set up a marketplace that serves two big pains in the marketplace. Firstly, property developers really struggled with traditional sources of funding for their property projects. Mainstream financial services went much more commoditized and walked away, especially from small and medium-sized developers doing property projects. Okay, so we said, knowing that ourselves and experiencing ourselves, we'll build the best lender in the market and attract the best projects to apply for funding from us, and we'll provide a brilliant service for that. And then we sort of thought about, well, where does that capital come from? Okay, and so we looked at the peer-to-peer lending model, crowdfunding model, to say, okay, well, potentially we could, once finding great projects, we could invite people to participate in it. Okay, and so rather than individuals say, going to their IFA and then going to putting money into a fund, then that fund breaking it into a dedicated property fund, and that property fund finding a broker, and that broker finding some property developers, all of which have cost and profit. What we'll do is build a more efficient system to get those individuals that participate a better share of the returns. And so what we work very, very hard on doing is the quality of the property projects we find and the curation of that and the due diligence of that, and we'll probably touch upon that. But match the capital is technically matching the supply and demand of capital as efficiently as possible, and that means that of the average that's very, very simple terms, a borrower might pay 10% interest rate. Okay, well, we give the lenders, the investors on the platform, 8%. Okay, so they're getting a much better deal, a much better share of those returns because we've disintermediated the whole system, we've matched it more efficiently, we've got purpose-built systems, and that's great for property developers with a far better service and investors with a greater share of those returns, backed by all of our due diligence and the security we put behind it, etc.
Yeah,
I was probably more than you asked for in the introduction.
No, that's fantastic, and I know it's been hugely successful since launch. So give us an idea, Mike, of the number of deals and some of the figures that have been achieved so far.
Sure. So literally this week we've just gone through a few landmarks. So firstly, we've now funded the building of 1,000 homes in the UK. Which we think is a great outcome, and not only are we helping housing undersupply and the housing crisis in this market by getting finance out quicker and better, okay, but right now what's really important is that is actually spend in the UK economy on labour, on materials, on services in building and construction, and hey, we need that as a country right now. We need to be building. So, 1,000 homes, they are worth a total of £170 million. We've now lent over 75 million. We've been lending since 2014. We've got 100% capital and interest payback track record. And lending for 6 years into the property development space, nobody else in the UK market has that track record. And that's including, banks and non-bank lenders, etc. So we do it really, really well. And we've got over 10,000 investors on our platform. And you put all of that together, and it's quite exciting because our last 20 projects, actually during lockdown, have all sold out in under a minute. And I think our average is now 41 seconds over the last 20 projects since lockdown. So we've been out there funding in the market when the whole development finance sector has packed up because they've got very concentrated institutional source of capital. We have institutional source of capital as well on our platform. but we've got a very diverse mix that means we can be reliable backers of property projects through any market in a very prudent way. So all of that, they're getting to quite interesting numbers, but I mean, literally, it's just the start. We see huge growth trajectory on top of the platform we've built, the scalable business that we've built, and all of the tech infrastructure, data analytics, and our brilliant team. We know that we could be doing 10 times that lending in just a few years.
Yeah, I want to pick up on that then, Mike. Really, I guess, looking at the sort of fundamentals of a business here, in that you talk there about systems, using technology and teams. So you're really leveraging to be able to scale now. But initially, you have to identify a problem, don't you? You have to identify a need and that there's a hungry market. And that's obviously, the timing was great back when you launched. And I guess, how have you seen the technology advance, even in that space of time, since 2013-14? How's it helped you to kind of grow and adapt and keep evolving?
Yeah, great question. So you're right. The best way that businesses start is when the founders experience the pain themselves and they have clarity of vision of what the better solution is. And that's exactly what we had. And so at the start, we listed. So I'll talk a little bit about both the borrower and the lender side. We listed our first project in 2014, and it took 10 weeks to fund on our platform. That wasn't very helpful to anyone. But you've got to start somewhere, okay? And with that first project, we hadn't built out all of our technology, so some of that was, the back end was lists of investors in spreadsheets and transferring funds, in and out of our client account, obviously client account, but manual transfers, and quite a rudimentary platform where we'd get notifications of people wanting to participate in a project. Right, but over time, I mean, we've got a team of 32. A third of that team is are tech engineers, and we have built in-house a brilliant technology platform. Okay, and it's really important that it's not only in-house, as in they are employees of the business, but they're not employees of the business in Ukraine or something. That they're in our office. Okay. And that absolute control over the technology, okay, underpins, how we serve our customers best, okay. And this market, especially on the borrower side, so property developers wanting to raise funding for their projects, that banks had entirely forgotten that there's a customer, and the customer has needs, and if you serve those needs well, they come back and they tell their friends, and you grow. It really was just a forgotten market, and that's what we built. So customer centric in everything we do. We do a load of research on customer needs, on their feedback, on their priorities, and that's both borrower side and lender side. On the borrower side, we also have our own expertise and experience as having been in borrowers' shoes. Of what are the kind of things that they'll want to build. But on the lender side, for example, we've done things. When projects started selling out in seconds a year and a half ago or something, we got complaints. I mean, even my mother complained that she couldn't get into projects because she couldn't type quick enough to get everything in. We get a lot of complaints of frustration around that. So overnight, because our tech team is here and it's awesome, and they're awesome, I sort of went out and bought the common currency of the tech developer, which is pizza, and we sat here overnight and we just built pledge limits into our tech system and rolled them out overnight, okay, to enable people the next day to get into projects. So we listened and we adapted and we delivered quickly. So, and then you extrapolate that over everything that we've built and everything we've built into our proprietary systems. Something like the auto invest algorithm that we've got is incredible. It's so complex, and it delivers such meaningful value to investors who don't want to necessarily pick individual projects. They say, well, wait a minute, CrowdProperty are listing this project. They've seen £3 billion worth of projects, and they've only ever funded 75 million. They put a great amount of scrutiny onto it. So what I want to do is actually spread my investment over lots of projects, but I don't want to always log in at 10 a.m. and have the try and buy Glastonbury tickets bun fights. So we delivered that for lenders as well, that enables people to spread across a load of projects in a stress-free and easy way. And diversification is a very good and important investment strategy.
Yeah. So good use there, obviously, of leveraging technology and the team. Very important. I think we always talk at WealthBuilders about education, support, connection. And I think often when people are investing, they're not necessarily very connected to the investment. So I guess that's one of the differences is that people really see the projects, they get to understand the people behind them as well.
Very much so. It's really important. Property is a people business. Well, everything is a people business, yeah, but people forget it. You can over tech things. What you want is tech to be a brilliant enabler of then exceptional service. And that exceptional service is, for example, on the lender side, face to face. People can actually phone up and speak to humans in our business. It's a bizarre concept in modern day financial services. And equally, our borrowers, we speak to them a lot, and our human expertise in the business around property is really important because we can add value to those projects through the process. So those elements are just critically important to building a well-rounded customer-facing proposition. But you're right. One of the great things about property, okay, is that everyone has a view on property. Okay, it's a national passion in many ways, and that's why for years we only had, until things started selling out very, very quickly, we only had the option for people to log on and actually actively select projects. Okay, I like that one. I don't like that one as much, and the reasons for that can be multifold. They could be in the detail of the numbers. They could be in the planning consent. It could be in the pictures. It could be in the end product or the market it's being built in. But people have a view, and they like to engage in that. Okay, and then we saw the pattern on the platform in our customer base that was, well, some people would actively select and would go in, that one, not that one, that one, not that one. Some were just logging in and pledging across all of them to diversify, maximize. And that's when we introduced Auto Invest, again, because we could spot that customer need, that customer demand, so developed it for that.
Yeah. So Mike, you're well aware of the WealthBuilders 7 pillars model, and we talk about generating recurring income from as many of those pillars as possible. And I think that many of them kind of cross over with CrowdProperty. And one of those, of course, is pensions. And many of our listeners will be clients of CrowdProperty, I know, and perhaps they may be using their pension. So could you just explain for people how that works?
Yeah. So the best example and the most flexible type, obviously, is the SaaS pension, which and we've got millions of pounds worth of pension money, capital on our platform. Okay, and when we understand, well, what's the customer driver behind that? Is that they say, right, I've got a pension pot. I've got great discretion under the SaaS structure, which makes it so such a brilliant product. And they look at it and say, right, okay, I might put some quite speculative high risk. I might work with some, for example, some property developers, or I might, directly, and I might do some equity investments or whatever. But if you think of a spectrum of risk, especially given returns, what we see is large proportions of people's SaaS pensions. They turn to us and say, look, what I really want, okay, I like property, I like residential property. You have a way, your platform can enable my SaaS pension to invest in residential property projects. And I want to diversify that. And I also want to outsource all the effort of selection. Okay, and this is really important because I mentioned earlier, we've seen £3 billion worth of applications, and we've funded 75 million. Okay, we are very, very critical on projects, and we pick the best ones. Okay, and we do that with our brilliant team, our tech, our analytics, our data learning, and all of the amazing things we've built into our system, so that you don't have to. And so you can be assured that relative to billions of pounds of project, anything we list is right at the top of quality level. And so people love that. Okay, firstly. Secondly, there's then the important point of capital preservation. Okay, and we see that as a major need or requirement, certainly people with larger pension pots. And all of our lending on the platform is first charge secured at modest loan to value rates. And if I go a little bit further than that, okay, we actively select projects where the end product will be for domestic undersupplied housing, okay, in liquid markets at mainstream price points. So our average pounds per square foot exit price is £290. Mainstream stuff. It's not, crazy sort of prime central London, so sensitive to foreign exchange rates. No, it's undersupplied domestic demand that will sell and have enduring demand. Okay, so that's the capital preservation side. And then there's getting better returns. And as I said earlier, the important thing is you get a bigger share of the return. Because we've built the efficient system, you get a better proportion. Okay, and those elements together make this a really powerful product for SaaS pensions. And just adding finally to that, one of the final developments of our auto invest algorithm was actually working with pension administrators to make sure that we could structure the auto invest pension product really, really well and appropriately, given all the regulatory requirements of ring fencing, etc. So we now have auto invest for pension and auto reinvest for pension. And what that means is that you could put money into a pot, and relatively passively that will be diversified across, or completely passively, diversified across many projects. And then when they pay back, they will be auto reinvested into projects, compounding those returns. So actually, you can benefit from relatively easy, hands-off, stress-free rolling returns from many, many projects with good diversification principles.
Now, Mike, I'm going to put you on the spot maybe here, but we're obviously coming out of a difficult period at the start of 2020. You've been, in there seeing really what's happening across the market. How do you see the next 6 to 12 months, and what are the signs out there for investors?
So I can look at this from a few ways, and I talk quite a lot of this. So we and our analysts and myself personally as well start right into the detail of the analytics around what we think about the market and forecasting things. I'm going to zoom, rather than dwelling on GDP, I'm going to zoom a bit more into property and particularly residential property market. So I look at this in two ways. Firstly, is there a correction waiting to happen, or has there been a correction waiting to happen? Because we saw that in 89-90. We saw that in 08-09. Years of real growth, so inflation-adjusted growth. Okay, years of growth that basically a shock then says, actually, let's correct those prices. Right. Interestingly, in the current market, if you inflation adjust on an average basis across UK, we're 17% below 07 prices right now when inflation adjusted. Okay, we're currently on average the same property prices as 2015, as 2010, and as 2004. Okay, so my view is there's not a load of growth that needs to be corrected and wiped out by a shock, which often happens. The second bit is then it's a supply and demand argument, and the big factor on the demand side will be about unemployment and how that plays out. But most importantly, this is different to 0809, because in 0809, loads and loads of people needed to sell. Some people need to sell in any market. Loads of people needed to sell. And then the banks went repossessing everything and needed to sell. So there's loads of supply into the market, and very few people could buy because the debt market caused the whole thing in the first place and was in disarray. In this market, it wasn't caused by financial institutions, and what we will see is lending come back into the market quicker. Those people that need to sell will still list. Those people that have discretion over timing will hold until that debt market comes back. So yes, we will see drops in prices reported. They'll be on low transaction volumes, but I see the market recovering to be fairly stable, relatively quickly. Certainly not the 83 months it took to recover in 0809 in nominal prices. And the final point on that is that we're not going to see years of runaway capital growth ever again. That happened for many different reasons, not least because of the just higher LTV levels and the debt market getting really competitive for investment mortgages. What I think we're going to see is much more reduced volatility and smoother capital growth, and that is what we're making sure we're putting product and funding product to the best and most liquid points and undersupply points in that market. So slightly complex answer to that, but that's sort of my view of how the residential property market will play out.
Great. No, it's very insightful. And before I let you go, Mike, what does the future for CrowdProperty look like? I mean,
the future's really exciting. Okay, and it's really exciting because we're going to do more and more of the same. Okay, because what we're doing really works and is really in demand by both quality property professionals doing quality projects and by investors. And we have an absolute focus. I have a phrase that I often use is you don't see Tiger Woods playing much tennis. Okay, if you focus, you become world class. And our absolute clear focus is to be world class on the borrower side, world class on the lender side. Put those two together and just do brilliantly by customers, okay, through any market. And on that basis, there's a huge future for CrowdProperty, and I can see the business lending tenfold the amount that we're lending now.
Good. I wish you all the best with that, Mike. Thank you very much for sharing with us on Wealth Talk today.
Thank you.